Good morning, traders. This is E for MarketWizards.com and eMiniWizard.com. And it's pre-market, taking a look at a few ideas for the team. Reminder that we have risk capital that we can afford to lose if we're playing this game. It's a business, and we're going to take some risks. And we try to take the optimal risks we can. We realize there's probably about 2 or 3 really good, solid trades a day, and there's a lot of noise type trading as well. And even if we caught just a couple of small pieces of noise type trading, we can still do well in this business as long as we keep our losses to a minimum. So the most important thing is risk management, and that's what we're trying to talk about right now, making sure that you have risk capital you can afford to lose. Scared money rarely wins. It's just too tense and too tight and too worried. So the real key is having enough capital that will make a difference, and to deploy that hopefully to grow your account to the point where you can obviously trade for a living if that's one of your goals. We're going to take a look at a couple of charts. First, we had the angels and demons. Note that we've got an undercut low from yesterday. And once we do an undercut low and then get back above it, that's our aggressive support. That's our rock. When I typed into the room earlier, this is our rock. We need to stay above that for posture for the longs, and the shorts need to undermine that. We've got the Linda Raschke's 3 Little Indians, 1, 2, 3 already. We had a sell overnight, solid sell, come down and undermine this, but regrouped and was able to hold this. So that's our big idea of support right now until broken. Going to look at the upside. We talked about that 95 to 93 as our resistance until that broke. And at the end of the day yesterday, I said that's still resistance, and we need to see if we make continue to make a lower low and a lower high. So far, that's true. The day is young, but that's true so far. That all we know is we've made another lower low and lower high. So for now, the call pre-market was we're going to use aggressively the 75 for support. And anybody that wanted to play back towards the gap, look to get to the 85s. 85.5 is our demon. Paid for sure, I said, by 88s. So this is a recap of what's going on since we were last together yesterday. Here's our 2-day printed range. And we can see that this 91 area is the middle. And that's in a printed range, meaning the actual print lows and highs in a 2-day range. So this is our weekly range, it's also our monthly range right now. So we are coming into the first key resistance zone, which is the pipe. $91 is our gap. And this is the overnight range. I'm sorry, this is yesterday's RTH, and the overnight range will not show on this chart. This is our RTH chart. So this is our support from here, and obviously we need to pay attention to yesterday's middle. That's going to be key, and I'd mentioned that RTH middle was 88s. So that's why I wanted to have traders paid by 88s on the first push this morning. This is the monthly, and on the monthly, what I've done is I have set this for that 64.25 close, and I have set the 14 as the top. We can set this any denominator we want. I've got it on a 240 right now just to show the range with last week's range and last month's range as well. So for now, all we know is that we've come back close, and I'm going to think about this as a key idea here. We're in this box right now, this 70 box to 93 and a half. That's the current fighting range. It's all we know. Right in here. So these ideas will be important today. And when I look at an undercut low, I average the two. So really, I'm thinking that the boys have bought 70, because 67 and 73, if you add them together and divide by 2, you're going to get 70. So that's the way I'm thinking, that this is their average buy zone at 70. And this is how you try to keep things simple. Instead of all this, I hear other traders with their 82 and a quarter and this kind of stuff. You know what? Come on, keep it simple. No, nobody knows. All we're doing is trying to guess the best we can as to zones where they buy, because they're going to buy in a 10-point zone. 10 points is nothing to them. That's their loading zone. I said that yesterday. Said there's a 10-point at least loading zone where they try to enter positions, the big boys. And you and I are looking to keep our stops 2-3 points max. These guys laugh at that kind of stuff because that's how they, fill their bigger positions. You look at that 15. This is actually the 30 that I'd showed. This is our backup chart for now, showing where the rain line is, over and under, over and under. The 15 that I posted, really a good chart. We migrated from the 10. Yesterday was the 10. As time goes on, we're going to migrate a little bit. And you can see how we're over and under the 10, but we're still now trying to dig in and push. I'm thinking two-way day. I respect Zeke's posts. He said this is a very bullish time of year. I do agree. We've got day off tomorrow. The markets are closed, so anything can happen. I'm still thinking range type trading for now, and using the idea of yesterday's low as key support for the long side. So I'm going to put this back 15. We've got multiple gap situations. Anytime we do that, I think two-way range, trying to confuse traders. And for now, we're going to keep that important 75 area. I said let's use this 78 for now as an aggressive idea. Half gap traders and gap traders already should be paid. And this is our predictive chart right now, and we can see how this 88 zone lines up as a resistance zone first. It's going to be opening up in a minute. This is the daily. And obviously, this will be our core right here. So this 98 shows up as a key resistance, and obviously this 93 area is going to be the flipper, just as we talked yesterday. So support zone down here. This is the deeper support zone. This is the normal back here at the 73s. And then on the resistance side is 12 and a half, key idea. So step by step, we'll take a look at opportunities today. Should be a two-way day. If it's a one-way day, I'd be very surprised. And we said yesterday that probably we'll get buying either by bottom fishers or by an extension type, buying pullbacks, because it is the beginning of the month. Anybody that is playing the open, going to use this 88 to 89 as the key target area. Make sure you are paid if you are going long side. And if you are conservative and want to sit for a couple of minutes, that's okay too. Goal is to take out of the market our VIG, 4 or 5 points every day per contract. And you're looking for your best opportunity. If you don't feel it, you don't trade. This is a trend line that I have suggested that I'm looking at right now that will be important. This is a neckline. because these are so far higher lows that have been bouncing. We still have the resistance overhead, but that's a trend line of importance right now. This is the big 85 area. We know that usually in this area, 82, the 85 tries to support the market. If it cannot, then we come back and we usually will tackle that 78 area first before anything lower. So this is a key battle at this open right now. And I've got several magnets today. One is back here at 78 and the other one up at 88. So this is a battle right now for those two magnets. That's part of our system. I've got 86.75. I'm assuming, Zeke, you've got about the same for the half gap. Anybody that is coming into the 86.75, 87.5 area, make sure you're paid. Note that we are under the blue line. This is a 5-minute chart. I'm reading this as more neutral than I am as this is terrible, because the rain line is still below us and still coming up at us. We know that there's going to be a chart behind this, a 10-minute chart, that's also going to be in play. So I'm looking at this as a neutral type open, but it does help the shorts being underneath these three lines. So I think it will take time to get for the longs to get out of Dodge here. And this is our, I'm using a 1-minute chart. Half gap is filled and we get an immediate rejection, but I think that's a profit-taking idea as much as anything. And note how helpful this chart was over here for that idea. So for now, and you can see it side by side, here's that 88 idea that I'm talking about as a key resistance idea for now that the longs have to overcome. Plenty of time in the day. I'm really today, I'm not looking for a big crash or a big pound upside. I am looking for range type trading. And I certainly think that we can take out the highs and come back up and retest in that 95 to 98 area. Will it? Who knows? And I think the whole key is trying to hold on to this 73. And first things first, you got to get by the 76, 75 area. So right now, this is really I think the fighting zone that needs to be addressed first thing this morning. That range right there. Don't worry about these lows. Don't worry about these highs. Just take your present battle wherever you are, because realistically, that's the name of the game. Is you've got to get into the trade, and it's like in a boxing ring. You know, when you're fighting somebody, you can stand in the corner and you never get hit, but you never do any damage either. If you're going to engage, you're going to have to take some body blows. You have to step up. If you don't like this open, then don't play it. Sometimes the very best trades are hit and run trades on a contra. If you're a conservative trader and you're just looking to make your 2 points, you look for an overextended play and then just try to nip it when profits are being taken. And a lot of times that's the way we'll play on a news event, because who knows where it's going. But you'll have an idea about where it should try to tackle next. So basis this idea, I'm looking up here at this area as first key idea is resistance, right? And then if I want to take it backwards, I'm obviously going to look back here as a range support. So first things first, take this last low over here and this last high or just above it, and that's your range. And that is how you do that, no matter whether it's a 10-point range or a 100-point range or a 25-point range. This is the whole key to rotational trading, is understanding those dynamics. And the better you get at doing it in the smaller ranges and then apply it to the larger ranges, the better you'll be as a day trader. Simple as that. So that's our last known resistance, and this is our last known support, and then try to figure out those dynamics. Anybody's playing for the half gap, and the gap which is 91. We're using this support right back here as our rock. If that breaks, then the 73 is all important. I still think we've got a little bit of chop to do.